What is up, YouTube? Welcome back to Stacks by the Numbers, and it's Friday. I wanted to do another quick update here on another smaller company that we've been looking at. We've been consistently updating, and of course the stock is down since the last time that the company posted earnings, even though they did beat revenue estimates and EPS estimates. But let's see what's going on. So name of the stock is FuboTV Incorporated, ticker symbol FUBO, listed here on the New York Stock Exchange. This is a sports streaming company, in case you weren't aware. And it was doing very well, as you see, hitting highs of almost $4 a share, and have since been pulling back. And it seems to me as though they're just beating this company up, in my opinion, for any reason that they could. Now, technically, the company did forecast, I believe, about $1.5 billion, if memory serves correct, for fiscal year revenue for 2024, and supposedly estimates were originally like 1.6 billion or something. So because those numbers were light, even though they absolutely destroyed earnings a couple of weeks ago, the stock, as you see, has gone down significantly. And just a quick review here, we can see that the company posted a loss of 24 cents. Estimates were north of a loss of 31 cents, so they beat by over 20% above those expectations. And here, I honestly, personally, was a little worried because, as you see, the estimates now jump up from like the low mid 300 million range. Now you can see estimates were just below 400 million. And I was very, very curious to see if FUBO could actually deliver. And as you see, the company comes in over $12 million above those estimates, beating by a touch over 3%, posting a little over 410 million for the quarter. Which is why, again, moving forward, if they stay around this 400 million mark and are able to come in now probably above, in my opinion, what will be lowered estimates moving forward quarter over quarter, right? Because they said 1.5 billion for the year, not 1.6. So these estimates might come back down to the mid-high 300 million range. But if the company is able to post like 390, 400 plus million quarter over quarter moving forward, they may actually end up hitting around that $1.6 billion mark. So again, you know, they're beating them up with what they initially said, that they might be a little shy. But in my opinion, you know, anything could happen. So we will see how this company starts to report moving forward. But again, they just brought in about 400 million for the quarter. The market cap right now is 455 million. So in my opinion, I do think this is all an overreaction, and I don't think that the stock really should have dipped below like this $2 level in my eyes. But again, you know, any negativity, you know, they want to beat the stock up, so I can appreciate that. But in my opinion, again, like I always say, I wouldn't view it too much as a negative. I would view it as an opportunity. But right here, you can see basically where the stock topped out here back in April of last year. You can see we're at about like this 130 mark. And since this quarter, 2 quarters ago, we can see that we had this run up and then we've been stepping down, and now we're kind of in what's looking like this long-term descending wedge here. But also in the last couple of days, you can see the stock, as it was trying to get beaten up, it was bouncing off of these fib levels and also bouncing off of this bottom trend line of this channel. So in my opinion, I do think that's a good sign, but I just want to give a heads up here. They could potentially want to step this down maybe to around like this 130, high 120 mark going into these earnings. And again, you can see the estimates now sub 400 million here at 381. So if the company is able to post 390 plus, maybe 400 million, in my opinion, the stock really should see a nice bump back up to like 2.25, 230. But also more importantly, may say now that, oh yeah, you know, we thought it was going to be, you know, a rough Q1, Q2, but it turns out everything's fine and we're able to beat estimates, so we might hit that 1.6 billion mark in revenue for 2024. You understand what I'm saying? So obviously, unfortunately, it does seem like we are trending downward, but if you're a long-term investor into this one, in my opinion, I really wouldn't get too worried because, again, even though technically they lowered that guidance a little bit, the company is consistently beating estimates. And, of course, we did the update when who was it? Fox, Disney, right? Who was the third company? I can't remember. But it was Fox, Disney, and someone else. Apparently, they had like this trifecta team up to go into the sports streaming market and basically take on little old FUBO with a market cap of under $500 million. So that's why, in my opinion, they immediately beat up the stock, and then I understand FUBO filed the suit against them. And I know, everyone was like, oh, this doesn't look good for FUBO. This is going to fare well for FUBO, blah, blah, blah. In my opinion, I actually thought it was the right thing to do, because we can obviously see the market share and the revenue and the business overall of FUBO is growing nicely, right? They're expanding partnerships, as you see. FUBO, what was this, 10 days ago, to expand coverage of 2 MLB teams following an agreement. So they're slowly continuing to grow their business, spread out, spread that footprint, grab more market share here, a little bit there. So that's why I think, in my opinion, those 3 larger media companies decided to all team up. And in my opinion, I do believe that it was a personal attack against FUBO. Now, again, that's just my opinion. But I think FUBO may potentially, if the lawsuit obviously goes in their favor, then they will potentially be awarded some damages, maybe. So we'll cross that bridge when we get to it, of course. If the company is awarded whatever, X millions of dollars, then obviously the stock is going to run on that news. But I do think that they may kind of just keep it down here in this wedge, and then maybe right around earnings, we could potentially see the run up to the top of the wedge and potentially a breakout if they happen to beat estimates. But let me see something here. 381. Look at that, 4 beats in a row on the EPS side, right? They apparently they always beat it up, and they had to go through that reverse stock split, and the stock was always tanking because of their losses. Now you can see the last 4 quarters in a row coming in well above expectations. The revenue, you can see, look, was down here about 320 and change. Last quarter, 410 million. So definitely took that next leg higher. This is the lowest negative net margin percentage going back the last 5 quarters. And next quarter will be Q1. They posted 324 this time last year. Now we're up to 381. And let me check annually again. Look at this growth annually. Honestly, absolutely phenomenal. Right now you jump up to 137, and you're saying you're looking to do at least 1.5, which would indicate still about 10+% growth year over year in revenue. And yet again, because it was technically below their estimates of 1.6 billion, which is a pretty big percentage jump year over year, in my opinion. But, again, maybe around 1.5 as opposed to 1.6. I really don't know if I would have personally completely started to tank this stock the way they did. But we can see the net margin percentage rising very nicely, right? We started at a couple of $100 million for the year. Now we're up here, 1.37 billion to close out 23. Net margin now sitting at only minus 21%, which is why I'm saying, in my opinion, as long as they keep doing what they're doing and continue to grow, they will eventually break above like that 1.6, that 1.8 billion dollar mark for the year. And hopefully once they hit that type of benchmark, that will propel them to net income positivity. So that also, as well, if that does happen, that will really add to the rally and the explosion of the stock, in my opinion, over the longer term. But again, based on the growth we've seen, in my opinion, this is more of a longer term play. And listen, if you want to take it like from the bottom of this range and try to rally and have it rally up here to almost $2, and you want to be in and out real quick, 30%, obviously that's a phenomenal return for a short-term trade. You don't need me to tell you that. So if that is how you're playing it, obviously I wish you the best of luck. But over the longer term, I think you guys can see the big picture, which is why, again, usually when I do a FUBO update or I speak about FUBO, pretty much 99% of you are looking at the larger picture. You're seeing the growth in revenue. You're seeing, again, where the stock was, how low they took it, and then of course the rally that it went on, how much more attention it got. And that's why I'm saying, that's why when I did the update video talking about Disney and Fox and third name teaming up, That's why I said, in my opinion, I view that as a big, big positive for FUBO. And everyone's beating him up like, oh, you're going to have competitors in the space now. It's like, first of all, they're late to the party, right? Johnny come lately. That's what we call him. Johnny come lately, showing up late. But more importantly, it's going to take three of you to team up to try to hit the ground running in a space where FUBO has been growing like a weed here over the years. You understand what I mean? And that's why, again, even with these supposed team-up deals taking place, you can see, FUBO still going out, extending agreements. So, disclosed a carriage agreement that will expand streaming coverage of the Baltimore Orioles, Washington Nationals. Said the network will be available to subscribers across a 7-state region. Yep, baseball season starting in about a week. Quote, we look forward to expanding baseball coverage across the Mid-Atlantic region. FUBO agreement comes in the week since a sports streaming venture between Disney, ESPN, Fox, and Warner Brothers. That was Warner Brothers Discover was announced. FUBO sued the three companies behind the new streaming service scheduled to launch in the fall, alleging they wouldn't let FUBO carry a small bundle of sports-focused channels that they are now looking to include in the new service. So that's what I'm saying. A lot of people are like, "Oh, FUBO's being salty," right? That's a silly way to look at it. Because that right there, that last statement, alleging they wouldn't let FUBO carry a small bundle of sports-focused channels that they are now looking to include in this new service. In my opinion, right there, that may be open shut case right there. In my opinion. That right there may be an open shut case right there. You told me we couldn't do this, we couldn't work together, or I had to do this, I had to walk this line, and now all of a sudden you're teaming up with even more competitors and you're all trying to come right at me. And now these channels are okay, now they're in your service, right? You understand what I'm saying? So I honestly don't know if Disney, Fox, and Warner Brothers Discovery, I honestly don't know if these three companies may quote unquote get away with this, and I think that we may potentially see a positive outcome for FUBO come out of this. But I don't remember. My apologies. I don't remember the last time that we looked at FUBO. Because I'm pretty sure it was on the news of that deal. Yeah, it was March 1st on the earnings. Okay. And you can see a couple of days later, as you see, FUBO, I think we saw this last time though, FUBO is likely to reach profitability in 2025 per its guidance, after it was able to reduce spending by optimizing subscriber metrics in 23. Analysts believe that FuboTV has, quote, substantial upside if it can compete against, quote, skinny bundles. Filed the lawsuit. Quote, FUBO faces high content cost either way, but is attempting to slash these with a favorable lawsuit outcome. With a win, costs will remain high. Well, without a win, costs will remain high. Risks are present, notably the ongoing lawsuit, but Wedbush is optimistic about FuboTV's emphasis on improving ad sales, expanding ad inventory, and minimizing expenses. Yeah, so the more they grow, we know this, right? The more, especially any type of media company, the more they grow, the more ads they're going to put on their platform, the more ad revenue they're going to generate, the more they're going to be able to charge people for these ads, and so on and so forth, which is why I said, in my opinion, looking at the growth of the revenue over the years, in my opinion, I still am pretty bullish on FUBO. Surpassed expectations, yep, 410. Wedbush maintain outperform rating on FUBO with a price target of $5. That's what I'm saying. People know they can beat this stock up all they want, but even the people in the comment section, and also the people in the Discord, again, Discord link in the description of every video, free for you guys to join. All of those people can attest to the fact that when it had this run up here and it was hanging out at, $3 and change, it almost got up to $4. In my opinion, all I kept saying was that move is 110% justified, and it's about time. That's what I kept saying. So that's why I have to say again, I mean, I know I spoke about it multiple times, and I've always said I personally like it, but I will be honest here. Like that Wedbush analyst saying, like, yeah, no, it's a $5 stock. I have to say, personally, in my opinion, I agree. I agree. And that, in my opinion, that valuation is based on the current business and growth. That's why right now, in my opinion, this stock should be at least $2.50, $3 a share. I mean, that's being ultra conservative. And I know that the guy at Wedbush over there was talking about, the positive outcome. They could get some capital coming in from the settlement. Forget about the settlement. That's what I'm saying. That settlement, that's recent news. That all came out just recently, a couple of weeks ago. I'm talking the whole time. I was looking at it before then. I said, in my opinion, this is a $4, $5, $6 stock. You give it some time, in my opinion, it's going to grow to that level. And again, the stock almost hit 4 on its own, and they want to beat it up, but the company consistently keeps coming in above expectations, and that's what I mean. We have this potential long-term descending wedge coming. Estimates are up here at 381 million, but if the company is able to beat those estimates, I really do think we may potentially see $3 plus. Let's check stock charts very quickly. I'll let you go. We're looking at the daily here. We can see the RSI touched that 30 benchmark a couple of times and had a couple of slight bounces, but RSI sitting here still in the mid-30s here. Touch below 35. Bottom Bollinger Band 134, right? What did I say? 131. So that's why we could potentially continue to sell off into the 130s. But I still say, regardless of any outside interference, like the lawsuit and whatnot. Aside from all that, the company, in my eyes, is growing nicely, and to see a stock that I initially looked at $1 was a little early, and they beat it up. They brought it down to like 80 cents, 70 cents, or whatever it was. And then all of a sudden it started rocking and rolling. And then the next thing you know, it's at $2 and change. It's at $3 and change. So that's why, again, I just have to stick to my guns. And I know I may be a little repetitive in this video, but I really do believe, in my opinion, this stock is worth significantly more than these dirt cheap levels that they currently have it trading at. But we can see that the MACD actually recently crossed back to the upside, and we had a nice little rally. I know markets were up for a little bit, but now we drop back down to the 150 range. Let's check over weekly here, and I'll let you go. We can see the RSI sitting here at about 34 1/3 on the weekly. We continue to slip. Bottom Bollinger Band value 130. So in my opinion, it does look like excuse me, it does look like, in my opinion, they will potentially bring the stock down to that 130 range, but technically it really should bounce from there and really start raging, and we could see even 234 back here at this 50-day moving average. I think we do potentially see that take place. I mean, next earnings aren't until the first week of May. So we still have several weeks before these earnings come out. But I do think we get back to that like 2 1/3, that 2.5 mark. Of course, they need to keep beating earnings, right? But the MACD looks like it was slightly starting to pull back. Looks relatively flat here, could potentially start curling and crossing back to the upside, but like I said, in my opinion, I think they are going to keep it in this range here. But anything can happen. Anything can happen. Only time will tell. And unfortunately, I think that's it. There is not much more to say. Let's check recent earnings, actually. And you can see, again, look how much the company was struggling with the losses, right? They had to get their ducks in a row. They had to cut costs. And you can see that they've done that very, very well. And these numbers are significantly better than where they were throughout 22. And, of course, on the revenue side, the company's just been rocking and rolling. I mean, there's just no other way to lay it out. And you can see here beating on the revenue side for the last 6 quarters in a row, going from the low 200 million mark to the low 300 million mark, and now as of last quarter taking that next leg up to the low 400 million mark. And now you can see, even dropping back down, we're still staying at the mid to high 300 million mark. And then Q4 expected to be even better, right? You're looking at about 40 million growth. So almost a 10% growth here in revenue, Q4 over Q4, year over year, up to almost 450 million, roughly around this time next year. So that's why, again, they could try to beat the company up. Oh, they said around 1.5 billion. We were looking for 1.6. Okay, fine. Right? So here we can see estimate 156 billion, basically right middle of the road. In my opinion, it is still very good growth. If we're talking percentage-wise year over year, that is very, very good growth, especially for a smaller company like this that's dealing with losses, you know what I mean? In my opinion, it really does seem like good percentage revenue growth year over year. And obviously after that, continuing here, 178, getting above 2, almost 2.25. So that's what I mean. The growth is there, and obviously it does take years to see that kind of growth, but even growing, 6, 8, 10, 12% year over year, believe it or not, it's a lot harder than you may think. And if you don't believe me, ask someone in the comments section who runs a business. And, unless you're in a really thriving sector and industry, to see even like 7, 10% growth year over year in revenue is great. Is great. And they're expecting even more than that technically, but again, they were just slightly shy of that guidance moving forward. But at the end of the day, I'll say it, I said it 1,000 times, and I'll say it again. In my opinion, conservatively, $4, $5, $6 stock. Again, that's conservatively. And if we do pump it up and feed off the positive catalysts and they keep growing and beating earnings, and it's a tech company in the tech space, and then down the road, if they are able to turn positive and go net income positive, in my opinion, I mean, $7, $8, potentially $10 a share. Again, that's going to be more in the longer term, surely. But this is why I say sometimes if you can see what could potentially be taking place 1 to 5 years down the road, then it does, in my opinion, make investing just that much easier. But again, that's just me. That's just the way I look at it. If you have something to add, something I didn't mention, something you're personally looking at when it comes to FUBO, please let us know down in the comments section below. That's what it's for. And I'm going to end it there, because it's 4 o'clock, market closed, and it's bad day. So, once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm, helps me get more eyes on the channel. And, of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain, could be hard to time, not knowing when to buy, when to sell. I appreciate everything you're going through on a daily basis. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for giving me a moment. You guys enjoy your weekend, okay?